Hello, everybody. A very good afternoon to you all, and welcome back to another live stream here on our Torex platforms. It's good to see you all, and welcome to NFP Day. My name is Connor Woods. I'm the Senior Market Analyst here at Torex, and very delighted to be bringing you this NFP live stream. It's actually the first one that we've done. We've been streaming all week, so it's good to see those getting involved. We are live currently on Facebook, YouTube, X, Instagram, Zoom, the lot. So I'll do my best to manage all the chat rooms. I think I can see them all. So if you have any questions throughout the stream, then feel free to let me know. And yeah, we'll get stuck into what's coming up for today. Any requests that people have as well on any particular markets, then I'll be able to go through those as well. But we've got 22 minutes until that NFP release is out, and it's going to be a big one. I'm looking forward to seeing what this is all about. So hopefully we get some good volatility. I think we will get some good volatility off the back of the release in about 20 minutes time. And yeah, I'm just going to show you a quick rundown of what NFP is all about. And yeah, we'll go through the charts and we'll have a look at some trade ideas as well. Is that Bobby on the YouTube channel? Hello to you. Good to see you. Thank you for tuning in today. I hope you're doing well on this Friday afternoon. And yeah, and hello to you guys speaking on there as well. It's good to see you. Thank you very much for the messages coming through. Yes, Bobby. Hello to you. Good to see you, and thank you very much for joining. We are in the middle as well of creating our Discord channel, so we should be able to. We stream on here every day. I'll just come on and talk for 20 minutes or so, and yeah, we're going to be building a community on Discord as well. So hopefully, if anyone's interested in that, then do let me know, and I'll be able to point you in the right direction. Okay, good stuff. Right. Let's take a quick look at what it is that we're focusing on for today. And of course, it is our NFP print. That's really what we're focusing on today. You can see it in our economic calendar here. So I'm using the suite of tools that we've got at Torex Plus. If we do want access to these tools, AI news sentiment, economic calendar, signals as well on there. Economic insights, if you want a bit of a deeper dive, and you can actually use something called Swissset as well, which basically gives you an account analysis on your MT5 account or MT4 account linked straight to this. You can see all your stats as well, which is pretty cool. The one we're going to be using for today, the one that I typically use probably more, and it's obviously dependent on the person. Some people would prefer to use the AI news sentiment if you want to get used to knowing, at the moment you can see that there's a lot of positive sentiment around Apple. If you're interested in those sorts of tools, and they're there. I use the economic calendar quite a lot, and it's a really nice economic calendar as well. As you can see, we're currently on Friday. You can see we're on Friday because it's hovered over on this green bit here. And we're focusing on the non-farm payrolls, the average hourly earnings, and the unemployment rates. They're the three things that we're focusing on today. The unemployment rate might be down here as a medium impact. Let me just check that. Yeah, there it is. Unemployment rate. For those who are not aware of how NFP works, it's really easy. All you have to understand is that we have every Friday, first Friday of the month, we have basically an employment statistics report that comes out. And in that employment statistics report, we get access to pivotal information on US jobs. I'm just getting the right thing loaded up here. And there we go. And in that pivotal information that we get, we basically get a 3 different readings. So we get the non-farm employment change. It's a jobs report in the US. We get the unemployment rate, and we also get the average hourly earnings as well. So they're the three things that we need. And in terms of their importance in the report, in what causes the most volatility, NFP is definitely up there as the top. And then I would say the unemployment rate comes in second, and then the average hourly earnings probably comes in third. So what I've done, and I've done this before for people who have seen me stream NFP, I stream it every single month. But I put together this diagram where basically it gives, because it can be quite confusing for people when the jobs report comes out. It's like what to look at. The non-farm payrolls is an employment report, so it's how many people were employed, during the previous month, essentially, in simple terms. You can see the forecast is for 200,000. The previous was 12. And I remember when we streamed NFP last month, Bobby. I remember when we streamed that, it was quite something. So 200k to forecast. Previous was at 12. That was a little bit of an anomaly, to be fair. I'm just having a look here, and what I've noticed more often than not is, I think, let me count that: one, two, three, 5 out of the last 6 months when we've had our NFP print, we've seen the previous figure get revised down from what it was before. That's just some people will say that the books are cooked, the books are rigged, but I wouldn't necessarily say that. But it's interesting that every time we get that print that comes out for the non-farm employment change, teams tends to be that the trend has been that the previous one. Um, what do you mean by that, Bobby? To have C Trader on their platform. Most of us, we are much comfortable trading using it on C Trader. Are you on about these tools that we've got here? If you are on about those tools, you can download them onto your MetaTrader. You prefer to use C Trader than MetaTrader? Because I don't. I don't at all. But that's just personal preference. I like to use TradingView as my uh, sort of analysis tool, and then I'll execute on MT4, MT5. Anyway, so I would be surprised if we do get 12,000 today. But if we get any figure that's sort of below 200,000, that's our dovish figure. And I could see, as a result, potentially, if I just go back to um, this here, if we do get this, typically the sort of game plan that I have. So if you get the NFP print, that's the first one we're focusing on. That's the jobs number. If that comes in above the forecast, then that's typically seen as more hawkish, and therefore we would likely see dollar strength. That may see a bit of a sell-off in the gold market. In terms of stocks, typically hawkish is more stocks down and dovish is more stocks up. But that relationship's a little bit more up for debate, but we'll keep it there for now. Um, if you get a figure which is like unclear, and by an unclear figure, I mean, if you look at the previous was 12,000 and the forecast is for 218,000. If you get a figure which is in and around the forecast, there isn't, it's what everyone was expecting, it's the forecasted print, then that's when I look at then the unemployment rate. Okay. And then when I look at the unemployment rate, I say to myself, right, okay, so below the forecast for unemployment, that's our hawkish print, that's our stocks down, dollar up story. But if we get an unemployment rate which is above the forecast, because remember, we're talking about unemployment, that's above the forecast here would be weakening in the labour market because you've got more unemployment. Um, that would be stocks up, dollar down. I'll let you know about that, Bobby. Sorry, no, it's fine, no problem. I wasn't confused. I wasn't quite sure what you meant at the time, but I'll let you know. I'll get back to you on that one. Um, then I look on to, and then if that's unclear as well, then I look to the average hourly earnings and have a look to see, if we're above forecast or below forecast. If we're above forecast on the average hourly earnings, then that can be seen as more hawkish, and that can be seen as a stocks down, dollar up play. Anything that's below the forecast for that, that's our dovish play, and that's our stocks up, dollar down. One of the reasons why NFP or non-farm payrolls as well is so important is because of the impact that it has on the Federal Reserve and its interest rate decision. This is what really moves the markets. So we have got one more interest rate decision left until the end of the year. This year we've got one more left. Federal Reserve. I think it's on the is it the 18th of December? Yes, it is. It's on the 18th of December. As it stands right now, there's a 70% chance that the Federal Reserve will cut rates by 25 basis points. But there's also a 30% chance that they'll keep rates where they are. They're the two scenarios that we've got in play. Now, the reason NFP is important is because it moves these goalposts, it moves these probabilities, and that's what then moves the markets. That's what moves the markets, 100%. It's all about It's all about interest rates and interest rate expectations and stuff like that. I know it might sound boring to some people, but that is what really drives the markets. Typically, if you get as a whole a non-farm payrolls report across all three, which are stronger than is showing labour market strength. If you get that, then it sort of fuels expectations that the Fed, it fuels inflation expectations, and that the Fed should not cut rates too quickly, too much. If you get if today we see another like a 12,000 figure, let's say, or a 50,000 figure, basically a weakening in the labour market, that would mean higher unemployment, lower average earnings, and less employment change than the previous month or than the forecast. Then what you'll probably see is that the markets will start to say, right, yeah, we're definitely going to be cutting rates, okay, and then that probability will get higher, and that's typically the way that markets work by doing that. So we've got 10 minutes to go. Are there any markets that anyone's looking for today that they want me to run through? Let me know. Let me know in the chat if there's any markets you want me to cover. What I'm going to do, and this is what I do on every NFP. Clip, hello to you. Good to see you. Gold, of course. Euro, dollar, and gold, of course. Okay, yeah, some requests coming in. I can have a look at those for you. Not sure what you mean, Yemi. Good to see you anyway. Thank you for tuning in. Is there any markets you want me to? We're covering NFP live, so we're going to cover it as that event comes out. We're going to be looking. We're going to go drop down to 1 minute time frame, and we're going to watch the volatility, and obviously spot trade ideas as well. That's the whole idea of the streams. Okay, right. Let me start on gold then. That's the market that everyone is taking a look at. Mellow AMM. Good to see you. Thank you very much. Gold as well, no problem. Yeah, I can take a look at that. We have got 10 minutes to go until that report comes out. So gold's going to be very interesting. Joe, what I'm going to do, I'm going to get a fresh gold chart up because at the moment, that one, I've currently got all those drawings on, are probably a bit messy for everyone. When it comes to NFP day, we like to just... Right, so what do we notice here? Really, that's been happening since, the 25th of November, is that this market has lost volume, it's lost volatility, and what we get is a low volume based range period or consolidation period. You can see that there, right? Not much clear direction. And what that's doing is that people forget this. When markets consolidate and the price is squeezed, what happens is there's liquidity that gets built on either side. Okay. So we draw the top of this wick, the top of this range, and the bottom down here. And what we've seen is the price chop and churn between these two levels. So that's our range that we've established, right? As the longer this range goes on, the more liquidity that's built on either side. So the best way I think to play this is to wait for the liquidity on the downside to be taken and trade it back up to the top, or the liquidity to be taken on the top side and then a move down. What people will do, and what traders tend to do, is they tend to go long here because we've had a breakout, and then what happens is liquidity is taken, then they get stopped out, and then eventually it probably will end up going back in that original direction, but not until it's taken the liquidity on both sides. Now, in terms of how you link that to today's NFP print, what we at 2636 and 2605 down here. So if we were to get, and this is for you, ClipHub, Bobby, Mello. Not sure what you meant there, Yemi. Sorry, I'm not sure what you meant. Show the left side of the screen. Anyway, this is for you guys on there who are asking about gold. A stronger NFP print today, let's call it 250,000, say, we're probably likely to see gold fall down towards this liquidity area. Sorry. And this becomes our hawkish target. So instead of saying hawkish, just say strong NFP, which looks to me like 250k plus. Right? That can be our target for that. If we were to get a weaker NFP, which is basically our... yeah, that's basically what I think, Milo. So I think that when that news comes out, one of these liquidity areas is going to be targeted. What we're looking for, if I just quickly finish drawing this bit here, what we're looking for, so if we get a weaker NFP print or weaker NFP report, which looks something like, I don't know, under 200,000, slightly higher on the unemployment rate, that sort of thing. Yeah, because you can never quite be sure which one's going to be taken out, right? What we're looking for is a situation where the market's clearly hunting liquidity and it's not a direct move. Because if we do get a weaker NFP, it's probably going to break straight through it. And if we get a stronger NFP, it's probably going to break straight down below it. That's probably what's going to happen. But if you get that sort of like, it's somewhere in between, like where there isn't any real clear, let's say it's 215,000, it's roughly in line with expectations, yet we see some knee-jerk reaction on gold like you typically would, that's when you can play the liquidity sweep, because you'd go, well, it wasn't a weaker NFP, therefore I'm going to play that back down to the middle of the range. Or if the report came in roughly in line with expectations and the market comes and takes this liquidity, then we could say, well, that wasn't that report didn't justify that move. Therefore, we play the liquidity sweep up there. Yeah, so when I say stronger, I mean a higher number on the non-farm payrolls print. I don't know if you saw this earlier. This is the best way. This is the best diagram you will see when it comes to NFP, because what you'll see is an NFP above forecast. That's hawkish. That's stocks down, dollar up. An NFP print below the forecast is dovish. That's stocks up, dollars down. Yeah. And the NFP is the one that causes the most volatility. But if the NFP is unclear, so if the figure comes in roughly in line with expectations and it's not really strong, it's not really weak, then you can look at the unemployment rate and then you can decide. And if that's unclear, you can look at the average hourly earnings and then decide. It's difficult because you're trying to basically when you're trying to look at these big news events, you're trying to look at both sides. Okay, that's what you're trying to do. How long we got? We've got 2.5 minutes. I've not even looked at euro dollar. That's what I'm looking for on gold. Euro dollar. It's looked like it's tell you what, it's making a move up towards this high here. And I said at the beginning of the week, if we do break this high, then we could be looking at some more strength. So I think it goes without saying that if we get a weaker NFP print today, which is our dollar weakness story, then it wouldn't surprise me if we come up to this area here. I need to do this before the release comes out. A stronger NFP, so a real strengthening in the labour market. We're probably going to see move back down, rotation back down towards. That's probably a bit far. Let's call it 1.05. That's our stronger NFP print. Something that looks like that. Hopefully I've zoomed in enough so you can see it, especially those on the Instagram channel. I know it might be a bit difficult to see sometimes because I'm on the computer. And yeah, that's about it really. Any other last minute questions before the release comes out? We have 1 minute to go. Let me know your predictions. What do you think? I'll tell you the figure I'm going for. I'm going for 175. That's my prediction. Maybe we should start doing some giveaways if someone gets it right. That's something we could introduce. This is actually our first NFP stream, so we'll be building this. And obviously, good luck to all those who are trading today, especially on this news. I'll tell you what I'm going to do. How long we got? 30 seconds. I'm going to go onto the gold 1 minute time frame. Here we go. Good luck to those who are trading it today. We'll see what comes out in just a second. Here we go. There goes gold. There it goes. Wow, big spike higher in gold. I imagine 227,000. And we're seeing dollar weakness. Oh, unemployment rates ticked higher, up to 4.2%. Here we go. Average hourly earnings have come in as well. Let me just quickly. Oh, I'm on the right day here. Yes, I'm on the right day. It's all going 227,000 on the non-farm payrolls print. So yeah, slightly higher than the 218 or 200,000 that was forecasted. Well, I don't know if you got that right. Let's have a look at the. That's the one though, isn't it? It's that unemployment rate. That's what's causing that weakness. If I can actually find it, here it is. Here, 4.2%. When was the last time we had an unemployment rate that high? September. So it's just creeping up. We noticed we got back down to 4.1. So it's still, yeah. I have to say, there you go. Now we're getting that dollar strength coming through. Because I wasn't quite sure about why the dollar was reacting initially positive when that was quite clearly, negative when that was quite clearly a fairly positive report. Okay. Right. And that's what we do now. We wait for trading is all about waiting, unfortunately. And sometimes I always find that the best NFP moves don't occur until won't occur until the next week. Basically, that's when the moves can normally be a bit better. Milo, so the NFP is 227,000. Will that make gold go up? No, I would say what you've got here is a very conflicting report. Like I said, you've got the NFP, which is slightly stronger. And in that sense, that would make the dollar stronger and make gold fall. However, we've also seen that the unemployment rate's ticked to like its equal highest level for God knows how many years. And so that's sort of counteracting that NFP print. And that would make gold go up because you'd get weaker dollar from a higher unemployment rate. Okay. That's why when you go down to the 1 minute time frame, gold's not really shown any true clear direction at all. Really, off the back of that, it's not really shown anything yet. It's not really shown its hand. We had a little bit of a move higher, a little bit of a move lower. We're basically stuck where we were at the start. That's sometimes the nature of especially December markets, but also NFPs and big prints, because when you get one thing that's telling you one thing and the other thing's telling you another thing, what you end up getting is just messy, choppy price action. That's typically what you get. What's happening to euro dollar? You can see, wow, look at that. So it's treated that. It's treated the release. What's happened to the stock market? Yeah, stock market does what the stock market does. It goes higher. No real surprise there, really, is there? Yeah, the Nasdaq's trading high. Actually, on our I thought we may get a little bit of a bounce on the Nasdaq, because when on the AI sentiment tool, I noticed that we had Meta and Apple that were showing really strong positive sentiment on our Acuity AI news sentiment. So that's an indication of strength, of course, and positive sentiment. And I was not surprised that we've seen this as a positive reaction in the stock market. Okay. Yeah, unfortunately, a little bit choppy, isn't it? Not really too much that we can get stuck into there. How has it moved the goalpost? Has it moved the goalpost at all when it comes to the interest rate decision? So the markets, yeah, you can see it was at 70%, now it's at 72%. And that shift towards a higher chance of there being a cut is has been represented in the price action that we see, which has basically been some dollar weakness initially off the back of that. But yeah, should be interesting. If anyone does have any other questions, I'll let the price action play out a little bit. I can't imagine we're going to get a crazy Friday like sometimes we do when NFP comes out. But the jobs numbers stabilized, the unemployment rate's ticked a little bit higher. It still leaves all options on the table for the Federal Reserve on the 18th of December. I'll be back on Monday to break down my top events and opportunities of the week. I also want to point you in the direction of, if you are looking to get involved, I know a lot of people like prop trading, and at Torex we've got all the solutions here. So if you are interested in getting involved in a prop challenge at really nice low competitive fees, we've got a Discord channel as well. You can start a 1K account for as low as $14. If you are interested in prop, then Atmos by Torex is your one to go to. And yeah, I'll see you all in the Discord channels. It's all free of charge. So I look forward to seeing you there and speaking to some of you as well over the next coming weeks. I'll be back on Monday for my week ahead stream, my top events and opportunities. Hopefully see some of you then. 1 o'clock UK time. I'll be late. Cheers, guys. Thank you very much. Take care.